I turned on Twitch, guys. I'm on Twitch. No stream yet. Just hold on. Give me like 5 minutes. But I'll just talk on there. 66 break right here. Guys, that's a really huge spot. Sorry, I have a lot of trades to manage, so I'm only turning it on because I can't keep typing in the chat. It's too distracting. But I did want to check something really, really quickly here. Easy calculations. Let's see. No problem. I'm glad you guys caught it. That was a really good hold off 3-2. Like a really solid hold off 3-2, especially the fact that it was a 66-point hold. You guys can cover some here if you want. I do have some odds around like 10-21, 10-24. I just want to see if they can clear 6-6, 6-8. I think that was a pretty good stick at 6-6, but obviously they have to take out 6-8, which they're currently stalling. When they do take out 6-8, we would want to maybe see like a 7-1 break. But just give me a few minutes. I just have to do something here. Yeah, it did. That was a really nice trade too. Thank you for that. It did exactly what we talked about yesterday too. On that break. Did you see that? Oh, hold on. Just give me like 2 minutes. I think open went to that 907. Yeah, it did. Hi there. Well, it says you just created your account yesterday, so I don't know. That's kind of sketchy. Yeah. .8. Okay, hold on. Hold on. Okay, that's definitely off. Sorry guys, I'm just doing some math for my contracts. I don't want them to... Okay, I need to know where these could be trading. I usually preset these and I forgot to do it yesterday. I think this is more accurate. Let's see, where did Intel stall? 33.45. 33.50 would be 241, and those contracts hit 232. So what is that? 33.69. 33.69. 256. No, that's still off a little bit. I'm assuming that the delta wasn't as high as it is now. 244 versus 232. 244 versus 232. So delta was probably around like 70 cents or something. Or 0.7. 232. Yep, that's exactly it. Okay, I got it. I think delta increased now though, so these might start moving a little bit better. I'm gonna set some to like 0.8, 0.88 delta, and 34, 20, 34, 50, 34, 75, 34, 90. I'm not sure if we get that high, but I mean, hey, those have potential for like almost $3, I guess. Let's go back. Okay, I have to set a bunch of alerts. You guys are gonna have to bear with me though, because I have a lot of positions on. I haven't even changed the title on this yet. Hold on. Did ES snap 7.2 guys or not yet? I stopped watching. Did ES take out 7.2? Hey? It did? Okay, let me put on my screen here. So at least you guys have that. Can you see the screen or not yet? Remember, today's the biggest flip day for the week. The 25th had a lot of odds. Okay, so this is a really solid hold off 3-2. This was also... I don't want to do too much recapping. Are you guys okay with me not explaining too much of the short trade and whatever? Like, it's basically a 66-point hold. So we had a lot of odds of holding around here, here. And then if we looked at this from like last week's range, even off like the 67.16, this is basically them holding 88 points. So like there's a few ways that you can look at this. Overall weekly range, we basically held 128 points. So there's a lot of confluence around the 66, 31, 33, 29, so on and so forth. So I just figured that they had really good odds of holding this area here and then trying to get this back at least to our 6-6 area. So 6-6, I think, was also a 34-point break right here when they broke this stick. Do you guys see this? With some relative strength. So obviously we're looking for around 44-point break right now, which is going to be around our 6.75, 6.678. It's basically going to be back to yesterday's lows. We do have a chance of potentially engulfing today. I think in order to do that, they probably have to retract at least half the range by before mid-session. So 6668 is half that range. Half that range from prior day would be 6680. Okay, so like 6680 or so to 6674. 66.74 makes sense too, because this is also going to be the 44-point break. Does that make sense? Around that 7.4, 7.5 area. So that'll be the first major spot, then 66.80, which is basically coming back to take out yesterday's lows at 66.78. And if we take out 75% of that range, it's going to be the retest of 67.06 that we failed to do overnight. And that could basically, remember how I said that there's two ways they could do this? If they take us up yesterday or today, right, they could take us back down. Remember I said that yesterday? And they could just reset the pin for the week around 67.20. Remember? Do you guys remember that? Another way that they could do this today was taking it down to just take it back up to reset the pin again. Okay? So there's two ways that they could end up doing this. So we have some odds of getting back to the zone today and essentially potentially getting a reset. A lot of this is going to depend on what they do around the 7.6, 7.4, and this area here, and the 7.8 and 8.2 area, basically, like this range in here. It's all relative to how early they can get this back above this range and into the zone. Yeah, IBM is probably strong with Intel. Apple actually held up pretty nicely, considering the reversal. Oracle had a pretty nasty drop. JD had a gap up this morning. I don't know if anyone saw that, and then kind of pushed back, but we're still watching that 35.81. I had to go off this morning. Where's ES? So some range reduction so far already. 9 points. Probably the break of the 80. No problem. I hope we get the full range on it, though. They're kind of stalling in between here. Like, they did take out overnight highs around that 32.89. Kind of stalling around this range in here, though. Kind of like half the range between these max ranges in here. No, IBM's a clear trade. SMOs off that 50% mark, 272. Mark that on your chart. That's a really big area for this one. I also have a flip date marked on this for October 1st. So it's clearly trying to get back some of the range. Just be a little bit cautious on ES beneath the 7.5 here. I'm gonna just mark some levels that we need, like probably around like the 5.6 to 5.8. I do want to try holding the means though, like even them taking this back beneath 6.4. Like, I would prefer that they try holding above 6364 here. Like, we don't really want to come back beneath the means, so this is the exact kind of stick we'd want right here. I don't really want this beneath 6.4 again. And 6.3 has to immediately negate. Just gonna shut off the screen for a sec. Also, like this morning, I didn't mean to be like rude about that, but like sometimes it's just too much. Like there's no need to freak out just because of one short trade. And like especially like right off the open, like I don't know what other kind of traders you guys follow or talk to, but I actually trade. Okay? Stop doing that. It's so annoying. In like the nicest way possible. That is so annoying. And just take the trades. You guys have to, some of you have to get better at doing two-directional trading. It's a bit much. This secondary hold here at 58. Oh, thank you. I know I keep forgetting to put it up. 58, 58, 58, 58, 58, 58, 58. 58. I have like 1,000 spreadsheets open. Oh my god. 58, 79. Yeah, I don't care. Everyone can learn their own lesson, but not like at 9:45, 9:30, and like rambling and expecting something. Like it's a bit much. And that doesn't really do anything. Like go journal at that point. And then it'll make you miss a trade. Like why do you want to miss a trade? Do you know what I'm saying? These were some flips here, so that's good that they held off this range. Also, we had some odds at 10.16, so that means that they met 6666 on time. There was some odds around 10.09, so they met 5.8 on time, so this is really good. We have some... There we go. It won't let me pin it for some reason, though. Intel needs to kind of come back here. We've got some odds around like 10.44. You could probably actually use the... You could use the 8.16 minute today. Let's see what does this roll over to 140? Minute. Oh, that's actually a nice flag. I'm gonna just see what else there is though. It doesn't really have to be aligned with lows, but I just want to see because we've got some that could reverse here around like 1040. So I'm just watching these because if they can't push this up, it's better it goes back red. This one here. This one has to be off 4-5. That's a really nice negation pattern, actually. This is the fourth bar here. Like this one here is a really nice setup for 10 a.m. On a flag, kind of went to like an inside range that doesn't flip till 10:48. We could just watch some of these potential flag setups since we had multiple structures like this. Like even look at this. This is really nice too for 1039. And this one's not bad either. There's a lot of them. So odds kind of keep opening up. Thank you. I'm trying to get back to it, right? I feel like I gave up trading individual names because of like writing about ES, which is like it doesn't make any sense because I'm really good at trading individual names. Do you know what I'm saying? So just trying to get back to it. I did want to see if I know. Probably some importance here that this holds. Did ES come back here, guys? This is a important flip here. We can also watch 1040. It was just a structural flip that I noticed, but there was just multi odds right here. So 6670 came back. Then around the 4748 period. There's some odds just after 11 around 1104. I didn't mark them, but like there's a lot of different structures that are going to flip over, but like do you see these here, guys? These could just be continuation structures. These are not exact off lows, but they are nice structures, okay? Basically like them negating this range in time before this bar here is super important, okay? Like you see that 1001? Are you guys paying attention? Look at this. Like this is a really nice structure based on that. Like this, let's mark this in pink or something. If you pay close attention here, do you see how, like these are structural breaking frames basically. See that? It held structure to not prevent lows. So you could use that around 1103. We'll just kind of watch for that. I don't want to mark too much on here, but a 40 was another flip right here. You can see that they kind of broke it down. Until getting some reversals back to that 32.89. I would want to see it hold around 32.52, 32.42 though. I don't really want it going too much lower than this. This is definitely enough to be considered a max range for today's session, but I did feel like they had decent odds of getting it to that 34.74 kind of area today. But this is obviously quite a bit of range. Intel doesn't usually hold its gains, so I am being a little bit cautious with it. I did take some contracts off at the 33.31, but I still have quite a bit left for tomorrow. 43 was my primary flip on ES, the ones marked in black, so that's why I wasn't too worried about them bringing it down like that at 1040. I was just showing you guys examples of different structures and how they could react. The bigger area we're looking for here though on ES is this 7.4 to 7.5 range. Until I would prefer it holds in this box area right here though. I don't want it too much lower. Especially ahead of 11 o'clock. Good morning. Yeah, I agree, because if they break the 7.5 to 81 area, that could push us back into the zone, like back to 66.88, 66.90, and then give us like an odd of retesting 66.99, 67.06. 67.06 was our overnight condition that we failed, this area here. Okay, so if they give us that odd of retesting this, it just basically resets the same things from overnight, and that would give us a potential probability of like getting back to the zone. I'm not really sure if they'll give us the full 67, 22, 32 retest. That's kind of a lot. They'd have to basically break this area really soon if that was the case. Like, I would say that they'd have to get back in the zone by noon for that to be the case, like back over 88. So right now we'll just kind of focus on retesting these areas here. Here comes the 4-7, 4-8 sticks, guys. Just gonna Yeah, thank you so much for that. I'm not... It won't let me pin it though for some reason. Oh, there we go. 1048, or yeah, 1048, you guys. These are some important candles here that I marked in the green. Also watching to see if Intel can try retracting back over 3282, 3289 here. That is a pretty important spot for it to get back to, otherwise it could lose some of its structure. I didn't really want it back to 3242, so this is still like okay. A way you can think of this too is like it still is like a bit far off, like basically in terms of like the range that it broke up from here versus the range that it's like holding from here. It should be pretty similar. Okay. Do you see what I'm saying? So it is a little conflicted still here. I think it does need a bit higher, and it has to snap pretty soon. I was thinking around the 1048, 1050 mark. Probably at least like max 1054. It would have to definitely come back to this range here before 11 at the very least, like to try coming back to this area here. Yes, getting some nice stick breaks here. So I had some odds just before 11 around 1052, 1055. And then like I said, there were some odds just after 11 at 1103, 1104. But these were the earlier odds of testing this 7450 area. There we go. This is better. This is more constructive here. There's a 1050 test here on Intel. That's exactly what you'd want to see back over that 3289, but this would give it an odd to then try pushing hopefully back to here before 11 o'clock at least. That's a really good stick. Is there volume coming in on that? I did give a bit of an opportunity here for anyone that maybe missed it earlier, but I do think it needs back over 32, 33, 21, 22 area. Yes, stalling there with a mass reduction stick. This is similar to that 1040 reduction. A little bit bigger this time, 7.5 points. I think that's probably close to our 80 mark that we're talking about. Yeah, it is. Which is 50% of the range from the prior 2 days. We didn't really have any odds during this window anyway, so if I go quiet and stop talking, I'm probably just managing some of my stuff. Okay? I don't care what it makes me do as long as it's gonna make me money today. I need this one to make me money today. It'll be a nice birthday gift. I don't know why I keep writing 2026 on everything. Like, why do I keep doing that? Hi guys, thank you. Hope you're doing well too. Sorry, I didn't have the YouTube chat open. Thank you, Delarisi. Did you guys make money off Intel? You should have made money on Intel. If you bought this with me yesterday, those calls were between 30 and 50 cents. And they hit just over 2 today. I don't know. We'll have to see. Yeah, I know. Like, that's why sometimes people are like, well, like if you work in the industry and then you see things, but it's like, sometimes it's just more about like price. action, I guess. I don't know. That was a good negation here at 52. So I had some odds around 10.55. This was the earliest odd for actually testing 7.4 ahead of 11. I have hiccups this morning. I don't know why. A reduction stick here on Intel, which would basically be right around this area here. Close to here. Thank you. All right, let's see here. See if they can at least try taking out this high range. It's 50. It's 10.55, right? That was a good negation here at 5.4 for Intel. I guess we could watch the 55 period on Intel too, since it was a flip on ES. That's a nice stick. How much time is left in this? 7175. This could definitely help odds here before 11. What do you guys think? Do they test 7.450 before 11 o'clock? Let's do our first poll. 67, 74, 50 test ahead of 11 a.m. I'm only going to set that to a 1 minute, so you guys better actually vote. If I see one vote, I'm shutting down the stream. So these were our first core ranges for weekly support too, but they also equate to being the 50, what was it, 50% range off yesterday's structure. Okay, so like kind of around here. Do you see that? From a open to low ratio. Open to low ratios are very important. Okay, because it implies that it could give you odds of getting back to that opening range, especially specifically the like time that you do it at. So if they're doing this as early as 11, hint hint, you need the I hope wish pray option. No. There's no hoping, praying, wishing around here. So there was some odds around maybe stalling the 19 area here on Intel if they would have broken around this time. So this definitely sets it up a little bit better, because now it gives odds of getting back to like 33.27, so we'll have to see. Yeah, I saw PLTR too. I just never took that. I don't know why. I never take PLTR. It doesn't matter how many times I chart that trade. For whatever reason, it just always like goes off my radar every single time. Oh, I just turned 36 and I already feel kind of tired and old. But then I think about it, and Bernie's like 65 or 66. and he still streams every single day. So I'm like, okay. I'll probably retire if I ever have kids. I feel like kids will be my cutoff, guys. Kids, I feel like, are exhausting. That'll probably be the day I'm like, I know, like, I'm pretty fit in general, but I definitely do consume a lot of sugar, I'm not gonna lie. At least no one ever thinks I'm my age. That's a good thing. What's MP? It doesn't really look like the breaks before 11, guys. I voted no. I felt like that 1103-04 period had some better odds based on those structures that I saw. So we'll have to see. I feel like I already have an advantage though, because I never ate unhealthy even as a kid though. Do you know what I mean? Like, most Lebanese food is pretty healthy. So it's not like I ever even ate bad food growing up. I actually get sick if I eat bad food, surprisingly. Like, if I have fried foods, I actually get very sick because I never got used to eating that when I was younger. Thank you. Yeah, it is. It's actually really good. I love Pakistani food too, though, and Afghan food too. A little bit of volatility coming in at 11. There seem to be some odds just after 11, so we're kind of waiting for that window to open up. Okay, like, see, okay, Iranian food is good, but I find it kind of bland. I don't know why. Like, I find, like, Iranian, Greek, Turkish food a bit bland. I don't know if it's the spices or just the places I've eaten at. Do you know what I'm saying? Like, in comparison, I'm saying, to, like, eating at, like, a Afghan, Pakistani, Lebanese, whatever. It's like, I don't know why. Like, I feel like everyone, like, north doesn't put as much spices or something in their food. It's like when I went to Greece, I'm like, this has no flavor. Like, this compared to like eating in Lebanon was like a complete flop. I'm like, Lebanon's food was 30,000 billion times better. Like, don't ever do that. If you're gonna go to that region, don't ever go there first and then to Turkey or Greece. You'll be so disappointed. Yeah, and I'm not even spice about like spicy, just flavor. Like, it lacked flavor. Do you know what I'm saying? Syrians are actually, I think, elite though. I'll get I'll get shunned from my family for saying this though. Syrians are better cooks than Lebanese people. I said it. Syrians are really good at cooking. If you guys are ever in the Vancouver area, you guys should go to Yesma's. That place is so good. Yeah, but Syrian and Lebanese people are literally the same people. I bet if I had a DNA test done, I'm probably Syrian. Like, Lebanon was Syria back in the day. I would say Lebanese and Syrian cuisine is the exact same. Like, Lebanon and Syria, our food is the exact same. And then Palestinian food is similar, but I feel like they have slightly different techniques and flavors. Like, I feel like Palestine has more, like, influence from, like, maybe Jordan or something. I don't know. Theirs is a little bit different than ours. They eat more, like, goat and lamb and stuff like that. Um, but yeah, definitely. Like, Iraqi food is really different. Saudi Arabia is, like, really different. We're just more Mediterranean style food with more seasoning. It's like, I think, the best way to put that. How do you think Turkey and Greece had the influence like that though? Like back when the Ottoman Empire existed, like for kebab, shawarma, all that stuff, that all originated from the Levant, that all came from Syria and Lebanon. So when people think of Mediterranean cuisine, I always find it funny that they think of like Greek food when it's really coming from like probably Lebanon or Syria. I think it's different though. I've never had like actual Arab food, I guess. I haven't really had too many good things. Like, I've never really had Iraqi food before. I don't know how different it is. Yeah, when in reality, they just copied us. Like, the funny part is all of their foods that they fight about are Arabic names. They're in Arabic, in our language, right? So like how did you create either of the two if you're quite literally talking about Arabic words? Do you know what I'm saying? Because those were colonized when they took over like way back and we had our influence there. Like those are not Turkish or Greek foods. I don't care what anyone says. Like none of those are. Those are all Arab foods. And you know who it is actually that doesn't get credit? It's Iraq. 90% of those dishes are Iraqi dishes. They're not Greek or Turkish. Sorry if any Greeks or Turks are listening, but they're not. Like you can't convince me that that's your dish if it's not even in your language. And not just one example, there's like several. Especially when they can't pronounce the word, you know what I mean? Which is always sad because like Iraq should get way more credit for a lot of the dishes and they don't. And then once you try those foods in the countries that they actually originated from, then you'd be like, oh yeah, it makes sense. Because they just taste better. Yeah, that's why. Because they had their empire, the Ottoman Empire, right? Which we were ruled under, but it's not their foods. You know what I'm saying? It's not theirs. It's neither of theirs. They just had more power at the time. But that would be like an English person having a French dish. Do you know what I'm saying? And then like taking the dish from like someone French and then leaving the French word and then being like, oh, we created this. Like what? At least change the name. At the very least, that's the least you guys could do. You're gonna like take away credit from like Lebanon and Syria and Palestine. At least change the name. Like that's the least you guys could do. If you guys are gonna capitalize on all of our foods and take credit for it, then at least change the name. And it's funny too, because the words that they use in Arabic are like the most like standard words ever. Like no breaks, guys, before 11 or just after 11. I would be a little bit cautious just because we didn't really want to lose back beneath 6'4", 6'3". since that could trigger back the means area here. I think that would be pushing it. That would be pushing it. Yeah, but they have to retract this like soon. We can't really give up the means. This is too volatile of an area between like here. Basically this area here. So I don't know if you're looking, but they're basically holding above a similar range and breaking above a similar range. Do you see that? Like 4.5 points basically above the bottom of the means and above the top of the means, which they really have to retract this and do it quick for this to not come back and retest the channel, because I feel like if they retest the channel, then odds are really reduced. We had some better odds closer to this window here, but I'm gonna start cleaning this up a bit. You guys should have covered at least some though in this 6-8 to 7-1 range, because that is a really big spot in general. Intel getting a nice break here. See if they can trigger the 33, 31, and 21. Oops, not 11. 22. See if ES, maybe ES has some flips at 11, 12. That's also very likely. What they could do here too, like even off the 16, since this is correlated with low of day, and you see how they stalled there, and you see like that reversal break here, the window is pretty short. It's only about 12 minutes, so there has to be some flips here at the 12 mark. I kind of stopped watching the frames, but I would imagine that there probably is, that are correlated to their low range. That's a good push. Intel getting that nice break over that 22 spot here too. And some breaks back over 33.22. That was a really good defense though. Do you see what I'm talking about, Euro? Like that, this cannot come back here. If this comes back here, this would easily go back and retest the lows, because the issue is we have a little bit of room still, like for this to go to like 30 and 29. So you're much better off holding around here. So what they basically did is they broke the top of the means. The means is around like 6.4 by 8 points, and then they still left a bit of room. So upside has a higher advantage, if that makes sense, by 50%. Do you guys understand this concept or no? The means is between like basically 50 to 5.2 to 6.4. Okay, so they broke about 8 points above, held about 4 points like above the bottom, meaning bulls have a higher probability, but they'd have to immediately retract. So you see how like they took this right back to the means, like to 6.375, 6.4. Intel getting a really, really nice push here. These are some really nice structure breaks. We're watching some of these flags earlier on Intel. Like on the 35-minute. $43 actually really nice too. Can someone track this in the Discord? The 43-minute on Intel. We'll track these 35, 43, 35, and 43-minute. I think this was the 11:10 flip. It was. You can see the bit of the reversal here when they stalled. And this is right off lows. This also continues through 11:53. What about that 35-minute? 10:50 through 11:35. Oh, that's this here, 10:50. That was like this breaking stick. And this is pretty funny too, because we did say that when they do come back and break, they might stall around like this 19-point ratio off that reduction, close to like 33, 40, 33, 27. Do you see this? Especially off the 33.21 break. That's actually really, do you guys see this? This is really cool. So this 19-cent reduction here, when they finally came back and broke above our 33.21, this is a calculated area. Do you see this? Look, isn't that really cool? And especially off the 33.22. Isn't that insane? Do you guys understand that? This is a really good example of calculated range. So I would know that the overhead is probably around 33.41 when it does come back to make this break. Off, and that would be measured off our 33.21, 33.22 area. Or you could measure off the actual stick that broke right here. Do you see what I'm saying? So when you come and take out 4.1, you probably want to take out 4.3 at the same time. And this should give you an odd of basically coming back and retesting that high if that was the case. Yes, had some odds here around 11.19, 11.20. I'm gonna mark the 3.5 and 3.6 on this. So what do you guys think? You think that ES has some pretty good odds to get back into the zone today? What do you guys think? We have time on our side, yes, but the next hour I would say is pretty important, right? Because we haven't even tested 7.4 and 80, which is like the minimum condition that we'd have to do. Like, I would say if they can't get past this range here by like noon, especially like around mid-session, like closer to like, you know, like the 12:30 to 12:36, 38, 45 period, that would be an issue, okay? So we still have some time. But they definitely need to get moving. What's that? I don't think I've had that before. Where are you from, Delarizi? Yeah, if they could do that, but at the very least they have to get back over there. Or you're from Ecuador. I used to have a friend from there. We have like no Latin American people here. I only ever met one person from Ecuador, one person from Peru, one person from Mexico. I literally know like no Spanish people. And the Mexican person I met was only half Mexican, so it didn't even count. They were half Mexican, half white. I'll set it up I usually set up a P.O. box during Christmas. Some stalls here after stalling that 41 spot. I just want to see if this is implying some range back to back test that 3289. Booth, you live in like Toronto region though, so I feel like you have like way more options for different types of cuisines than we do here. That's quite a big reduction on the stall at 33.41. I just want to see if they can try holding off the 32.89 this time. Yeah, 2 hours is still quite a bit of a drive though. That's pretty far. Are you in like a smaller town? This is still stalling the means here beneath the... Well, it's kind of like trading back between like 6.4 and 6.8. I mean, them digesting the means right now is probably not, it's not the worst thing. It's just that this area does imply volatility, which is why I don't really like trading in it. But technically speaking, from a time perspective, we're okay. But if they start stalling a bit, I'll start cutting my position. Well, we got lucky because we had entries literally off the lows at like 3.2, 3.3, but I would still start cutting some of my position though if they don't start retracting and trying to stay at least above 6.4, 6.5. Overall market's pretty red today though. Banks are kind of flat. No. Yeah, but the streams also distract me a lot from my own positioning too, I'm not gonna lie. I don't want to be on stream all day today. It's only 9 a.m. my time. Oh, I didn't realize I was muted. No one said anything. I was just saying that we need to definitely hold here. Like, this is a similar period to this here. Maybe not as strong, but the risk is pretty high beneath 5-1, 5-2. I definitely don't want this back in the channel this afternoon. Otherwise, that's going to reduce all odds. Periods around like 11:35, 36, 11:42. I'm going to shut the stream off, guys, in like 5-10 minutes to focus on my positions. I don't usually stream in the morning. It does take away from me sometimes, so... Intel, I definitely want this one back above 32.89, especially in like the next few minutes here. It's still okay, but we definitely need to hold over the means, like the 5-2 area. This one had an odd at 3.5, so I was saying on the mic I would prefer that they try breaking back over 32.89, ideally by like 3.2, 3.3. Just to give some odds of at least getting back to maybe this area here in the next like 5-10 minutes. Sorry. I don't usually stream this early. Basically our overhead though is 7.4, 7.8, 80. We have odds of getting back to 8.8 today. We failed 67.06 overnight, just to recap. If we can get back over the 7.480 area, like 7.4 7.880 by our mid-session, like around 12:30, 12:45, we have some decent odds of at least getting into the zone and expanding there, but we have to avoid the channel. This was a 66-point hold off close on that there. All right, let's see here. 3.3 breaking that 8.9 mark, so that's good. This is setting up okay. Yeah, we took the long literally off the lows at 3.2, 3.3 because this was a 66-point hold. Like, very, very, very quick recap. It was lots of confluence here. 128 points basically off highs, like if they held this range. Okay, they held above an 88-point ratio here too. So the issue is there's still room here, which is why it's an issue if they break. Do you see that? But they basically held above a 66-point metric off 3.1. So it's a tough spot because they have a tiny bit of room to go back down. Hence, holding here is so important. Does that make sense? Because they're basically around half the range in here. Like the differential between here and here is likely a similar differential between like this bottom support in here. Does that make sense, guys? Do you guys understand this concept? So risk here is pretty high, because they're basically at a 50-50 odd right here, okay? Before I sign off, like this is why holding the means is so important. Like you definitely don't want to give up this range here. Okay? And this is a very important period to retract back, like I was saying. That's why I was like, I'll wait at least until the 3.5. Why did they get deleted? The 3.5, 3.6. That's a really good stick at 3.4 here, guys, ahead of 3.5, 3.6. We're tracing back our range. Same with Intel. Intel getting back here right on time. These are the exact kind of sticks we want to see at 3.4, 3.5, 3.6. Hopefully that helped you guys hold your longs a little bit longer. I bet some of you guys were getting scared there, especially on the second back test. I didn't freak out too much because I knew we didn't really have big odds right here. Does that make sense? And they have odds to negate by 3.5, 3.6, and 4.2. So kind of like what they did back here. 66, 66, 66, 68 retest at 11.35. 11.35 was a calculated period here. 11.42 is an important flip. Intel had an odd at 35 for retesting 33, 33, 33, 22. See if it gets a better stick break this time. Liquidity is low. I think that's part of the issue here. Okay, let's do... I could keep the stream on if you guys want my screen with the times and stuff, but I don't really feel like talking too much, if that's okay. I'm just kind of tired this morning. So it's up to you guys, whatever you guys want. But if I'm going to keep the stream on, I'm probably not going to say anything. Because plan is literally just this. If they can hold 5.2 area, which they're doing so far. Get this back to 6.668 during this period here. Maybe retest 7.4 as early as this period here. That would be the most ideal. If they can't retest at this period here, it kind of extends us all the way through till our mid session, which is around 12.12, 12.30, 12.45. But this point in the day is so important that they at least test this area here between 7.4, 7.8. Does that make sense? The earlier we get into the zone above 66.88, the higher we have odds of getting back to not only 66.99, 67.06, but maybe even pushing to like 67.14. But Intel met its condition on time. This had some nice structures. Not really the best in terms of how it like broke, but still it was good to get it back into range. Do you see that? What was that other time frame, guys, that we said? I don't think anyone wrote it down. 43 minute. This was for 11:53. 46 minute was 11:40. 49 was 12:10. 12:10 has a multi-flip on Intel, along with 11:30. So this one is still setting up really nicely for some continued breaks here. Another 53 flip, 53, oh, 57. That one's actually really clean because the 10-11 on this is aligned with highs, so 11:57. Can we watch the 53 minute here on Intel? Like there's multi flips like this, but I really like that one. Basically just under an hour. So you probably want to break before that hourly lot, okay? There's a high confluence here at 11:40. So if we can get some stick breaks and a retest here, this is setting up really nicely for a retest of highs by 11:53, 11:57 on Intel, guys. This could explode actually in like the next like 10 minutes. Especially I would say if they take out that 33.41, since this was calculated here. We haven't looked at NQ today. Where is the NQ chart? I don't even know where the NQ template even went. I have to pull it up. XOM, if anyone took that one, I mentioned it earlier. It's actually just broken its high of day. There we go. Here's NQ. NQ basically same thing, held the bottom of the zone. These would be the overheads on NQ around 24,671, 83, 89. So this one, let's see where this one stalled overnight. Last night. Probably stalled. Yeah, our 24,904, 911 area. These were some pretty calculated spots on this, so that would make sense. And look, that's the 66 metric. Isn't that crazy? On NQ. So same thing as ES. Literally the exact same thing. Actually, good thing I wrote some notes on this because I've been really bad for that. So NQ, it probably has to break this 24,689. That's probably the ES equivalent to breaking 7,274. Does that make sense? And ES has an odd at 1142, so What do you guys think? Do they retest high of day here off the 1142 stick? Ideally, 1141 would be better because that's ahead of the flip. Just quickly, what do you guys think? Do they test 7.4 here? CSCO we haven't looked at in so long, and that used to be one of my favorite names to trade ever. Like, I know IBM was moving today, but this one has always been one of my favorite names to trade. I wonder if this one is still... Can't remember if it was... It's 4 months setup where it flagged. Yeah, and then it kind of went into a bit of an inside bar, but... That's a really nice one too. What about GE? GE is also insane. This was my annual pick for 2023 and 2024. And it hasn't even stopped. This thing is insane. This thing has not stopped going up. Remember when we looked at it back here? This is where we initially took it long. Back in here, remember? I took it long at 55 and 60. And it just never stopped. And this one I'm pretty sure was the 11-month flag. Yeah. This isn't my template on this one. I'll have to look it up. But this one basically broke out of a massive bar. And then on the 2-month, it's on its 4th cycle. 1, 2, 3, 4. ES getting that break. A little bit late. Can you guys document that? 1 minute delay on ES. That could imply volatility. Hey, write this down quickly, because that could imply volatility. That's a minute late. And I was looking for 7,450 test on that break of 7.2 or highs. 66.74.50 to the exact penny tested here on the break of highs. That's exactly the spot that we need to test there. That is a minute late though, so just be a little bit cautious of that. The only thing that could help is the fact that 4.2, even though it didn't take out the high, do you guys see how it still closed near that high range, like the highest closing structure? But I would still be a little bit careful since they took it out a minute late. Intel had better odds around 11.52.53. So we'll keep a very close eye on that. NQ, I think, was, we said this area here, right? So NQ met its range. We had better odds around this 11.35 to 11.42 period, so I'm glad we waited. Whoever's following along. Did that help you guys stay long? Like I was saying down here, if they never held the line around 3.435, and if they failed 5.2, I would have started cutting my long here. Or like at least cut part of it. So we could even measure those ranges. So 221, the spots that you can like look for on NQ. Could look at like 286 ratios, I think. 286 is what again on NQ? 44 points, right? So it would be like right here, like 247, basically around 0809. This is a 44 point ratio. On ES, it would be literally right here. Do you see it? 7.5. And those are what we talked about earlier. So NQ is around 708, 709. ES is closer to 7.5. So it's a pretty big spot to break on both of these. because that's what could give us that 66 point reversal back, guys. Okay, 66 points back would give us, so on NQ 66 points back would be 429 to 442 points roughly. 429, it should be around our calculated spots up here. Okay, this area here. So breaking this kind of range as early as this point in the day is pretty huge. And we talked about 7475 being the big overhead here this afternoon before 12. Remember? We said if they can break 74, 75, 78, 80 area before 12, what does that do? Don't get this wrong. What kind of odd does that give us? If they break that area before 12, before mid-session, what kind of an odd does that give us? No, I want exact answer. Where in the zone? Where do we have an odd of testing? I mean, if we got to 7-8, like getting to 8-8 is not that crazy. Do you know what I'm saying? So what kind of an odd would we have? If they break this kind of a ratio this early? Expansion scenario could be in play. They could take us back to weekly reset. Remember? Did we not talk about this morning? 67.16, 67.20, 67.19. They could set this up for an 88-point retracement break, which would take us back to weekly OR. If they really want to negate this risk of any continued downside on the week and take us back to the channel by Friday, like we discussed yesterday. Okay? That's a lot of points. That's a lot of range. Mostly if they do this before half point of the session, okay? Everyone's on the same page? Okay, that's an expansion scenario if they can break this range early enough. Okay? Secondary scenario would be if they take this above 8.8. We'd probably stay stuck with the neutral ranges like 66.99, 67.06, 67.10, 08, 14. Does that make sense? That would be more in line with getting back to like a 66 to 68 point break. That would be the case if they wanted to just reset yesterday's pin. Do you guys understand what I'm saying? Because yesterday we had I wanted us to close closer to here. Okay? Instead we closed closer to here. So they're going to reset one pin, I think, one way or another, would be my thoughts. I would be pretty shocked if they didn't reset the pin. So either they're going to reset these weekly pins, okay, or they're going to try resetting yesterday's pin. Got it? A lot of this is relative to how early they can break this back over these ratios by too. Also, breaking back over the zone is also breaking 75% of today's range, by the way. Let's go back to Intel here. The real star of the show. INTC has some volume coming in here at 1150. I had some odds of retesting high of day as early as 1152. Which would be ahead of 5.3, and odds to expand here between the 5.3 and 5.7 window. Can someone document Intel here, please? So on NQ, I think the equivalent of that would be if they break this kind of range here and they were to actually give like a full structure break. I'm not really sure if they'd get the full structure break, but if they did, it would be like a 572 point move or something like that. Which I know sounds kind of crazy, but Those are the kind of odds we would have. This is an expansion scenario. Like, these odds are only high if they break super early, okay? So they'd have to start breaking pretty soon. Thank you so much. I hope it's helping you guys at least. All right, let's go back to INTC. How many guys think that they're gonna break this this wall here? INTC high day break by 11:53 to 11:57. I'm gonna set this to 2 minutes. Testing it at 5.3 would be good, because then it helps that window here at 5.7. $12.10 had multi-flips, so I'm gonna actually shade this in yellow. ES stalling here a little bit, and that makes sense too because of that delay. Had we done this at 11:42 versus 43, that would have been way better for our odds. I kind of stopped tracking here, but like a lot of these kind of just went into like some inside ranges. This is also the 4th bar here. Can you guys vote on that poll for Intel? This is a really good 3-bar structure, so I'd be curious to see what you guys think. Let's see what kind of structures ES has. 30-minute looks pretty nice. Let's see if there's any flags on ES. We did watch the 32 earlier. This flips at 12:08. ES has a 12:08 flip, even the 16-minute, which is aligned with low of day. Can you guys write that down, please? 12:08. There's a lot of bull flags here. 12:09. We already looked at these, but this one was in line with lows at 12:05. A lot of negation structures here. You can kind of see them. These ones are not as clean, and they're a little bit more delayed. So they're not really the best for odds. This one's for noon. So there's a lot of really nice structures that formed here. This one's really, really clean for noon. Like, these are not bad. They're okay. This one's really nice for 12:24, 12:27. Those are more like delayed structure breaks, though, if they waited till 12:24, 12:22. I don't really want to wait that long to get like a structure break. Does that make sense? Like this one here is our 11:42, which is in line with 12:41. This is in line with lows. So this is not a bad structure break. It's just, it would definitely be some delays. Okay, so if we can break during the earlier periods here, like around 12, 12:01, 12:05, especially because we haven't even taken out 7.4 and 7.5 yet. Do you get what I'm saying, guys? What? Yeah, it's getting, we said it could hit 143.40 today, right? On this one? All right. right, let's see what they do here. Also, Intel stalling and reducing range a little bit ahead of these periods. 1210 had better odds, so I'm not entirely surprised. And look, they're doing it by that 19-cent range again. This seems to be a common factor here. I think that would equate back to its high of day. I'm just measuring the range between this period. It's about 21 cents. So around here. They're trying to hold the line at 33.31 on this one. Extend it to our 12:10 period. We're basically stalling 44 points off those. Okay. Let's do a max range poll since it's still before noon. Max range for real-time session. What do you guys think? 66.78 to 66.81, 66.82 to 66.87, 66.88 to 66.96, 66.99 to 67.06, 67.06 to 67.14. Actually, I don't want to put that one in there. Hold on. Let's just go 8, 6. It doesn't let me add 66.20. Okay, let's just do this then. Because I thought 16.20 would be the expansion scenario, but it's okay. We can just... Can you guys vote on that? I'm actually curious to see what you guys think. So far, based on how many times they've stalled, it's still not mid-session yet though, so like we're still in the clear, and they still tested 7.4, so like technically speaking, we could still get a 67.06.14 retest, but it seems like they're trying to set this up to reset the odds of 66.99, 67.06, but we'll have to see here. We've got some odds right now at 12.01. So let's see. Oh. I have to use the washroom, guys. I don't know. I know this is not good timing, but I'll be right back. No, I just looked at the screen and I looked at JD thinking it was Intel, and I'm like, there's no way Intel went to 3558 in a minute. Okay, what did you guys vote for here? Let's see. Poll 66, 88, 96. Okay.
Welcome to Tom.
Yeah, I was. Sorry, I didn't realize that. I was saying this wasn't bad. 1201, 12 getting back over 6871 was good. They reduced it at 03. This is a good structural hold. We have some odds here at 1208, 1209. I would prefer that they try at least testing this area during this period here because otherwise we're kind of delayed. like through 1224, 1222. I don't want to wait that long just to test or take out 7.5. Does that make sense, guys? Because then at that point it's going to get a little too tight. Intel, I was saying that we had some good odds of high of day retest again here around 1210. The 1208 stick, I would say, has to get at least back over 33.41 for that to make it for that to even be a probability. So far, the 08, 09 on ES are stalling a little bit. NQ, I think, is just hovering these highs, right? There was another odd at 1212, but I just kind of left it out. What is the 16-minute flip? 1224. Yeah, like our mid-session has better odds, but like around 1222, 24, 30. Oops, not 40. I have to put 50. Alright, let's see what happens here. Yes, stuck a little bit here. This was the window that had the better odds. Like I said, if they don't clear this range during specifically this frame, okay, like there's some really late odds this afternoon around like 140 that I highlighted earlier this morning, but I think that would take away all odds if we had to wait all the way till 1240 just to clear this area. Like this is a pretty big area to try retesting, and this is a pretty important time of day. I'm just deleting these because these weren't major flips, guys. 1222 to 1224, a little bit more important, 1241 to 1244. But it was good to at least just have them noted. Intel stalling off that 1210 stick. And it looks like it's getting some range back to that 3322. Some volatility picking up here, not too much, but enough to not at least get it to come back and retest around that 33, 46, 44 area. Yes, same thing. I didn't even realize I had one contract of Apple, guys, that I didn't realize that I didn't sell the other day. That thing is like basically worthless. It would be funny if that one contract made some sort of a recovery by tomorrow or something. Hi, Adam. So what do you guys think? You think that they're going to actually clear during the mid-session here, or you think that they're going to stall this? There's basically the odds around that 1222, 1224, 1236 to 1244 window. I would definitely say that if they can't clear the 7.5 to 7.8 range during that time frame, then we could just be stuck this afternoon, or at least limit range for the remainder of the session today. I think the fact that we Well, we did already test 7.4 and 7.5, so I feel like the odds are still favorable. They're just trying to make sure that they're managing range appropriately. So maybe odds of getting to like 67, 16, 20 could be off the table for now. But getting back to this zone area here, I think is still favorable. I don't think that that's completely a negated odd yet. Not yet. We'll have to see. Open got a break, guys, back to that 907 mark. I don't know who was trading this one yesterday, but I just got that alert on my broker. Noble Mom, I think. I'll tag her. It just triggered that 907. I think we said the next mark on there would be that 979 or something like that. Yeah, watch for that. There's volume coming in too. It's pretty insane that they stalled exactly the 44-point ratios though, so equivalent on NQ is like right around here. Intel getting some reductions again. The issue with these is they kind of took them into like some inside ranges and they have way too much time to break range, like all the way through like 12:36. Some of these extend as late as 1 o'clock. They did hit some fourth bars on some of these time frames too. It's more so these ones that put us at some risk because this runs until 12:57. So there is some importance here that they at least try holding the line in the next 10 minutes on Intel. We're so close, guys, to getting partnership for viewers. I need 75 average. I keep hitting around like 66 to like 70, 72, I swear. And I don't know if they do that intentionally. It's kind of weird. Window's going to open up here again, guys, around that 1222, 1224. This had better odds. I did prefer that it does retest this area here at this point in time, as opposed to waiting till like 12:30, 12:44. I'm just going to reset the alerts on this one too, off these areas here. I'll put this one up for 2 minutes, guys. We're still fine if we don't during this period here, since we have until mid-session, but can you guys vote on that, please? this period would give us the better odds if they're going to break us later this afternoon. Yeah, but the nice thing, Brendan, is 7576 is technically enough. Does that make sense? You have to just move that pin and just click the pull on top. Is technically enough that it doesn't even have to break yesterday's low. It's kind of an interesting theory because it still breaks 44-point metric without necessarily having to take that out, and it still breaks over 75% of the range. So closer to like 7.5, 7.6. Obviously taking out 7.8 would be great, but all you actually have to take out is this range in here. Hence they keep stalling. 7.4, 7.5. And that's why this area is calculated. Look, they stalled exactly 7.450, 7.5. There's like 40 seconds left on the pull, I think. Intel, I wanted to see if they'd at least get back over that 33.31 around this 12.20. Intel's flip, I think, was 12.20, so a little bit different than ES, but so what do you guys think they have to do at this point in the day? What do you think is a condition that they would have to meet, specifically during this period? And I'm going to give you guys a big hint here, obviously. What do you think they'd have to do here? If they don't break upside, they have to at least do what? No. If they don't break upside, I said if they don't break upside and your response is break 75, oh my god. Yeah, stay above, ideally 6.4, 6.6. We want to stay above the means. Ideally where like this line is right here. I don't really want this coming back beneath 6.4. No, it's okay. That was just funny. A 6.6 would obviously be a little bit better. They're kind of pushing this pretty close here though. Intel got a breach beneath the 33.21, but trying to push back here. Kind of funny because this is Intel's primary support here and ES at 6.6, and they're both kind of testing the same ranges at the same time. I had a flip on Intel at 12.20, so it's maybe in line, I guess, with ES, I guess, off the 6.6, which is good because then it gives us some odds of, like, you'd always rather retest downside first, right? Like, you'd always want to go back test before your flip because then it still gives you odds of, or time, I guess, to come back and retrace and break. So really nice stick break here, exactly 33.31 at exactly 11 or 12.20 on Intel. This is helping save the range on this one, and some odds to extend all the way through. I think we had around 12.36, 12.50. They are delaying it a little bit. ES has some odds right here too, so I mean we could obviously see if market has relative strength. That could clearly help individual names, especially ones that are holding up the market today like this one is. So far still stalling on ES though. I'm just going to mark some of the generic mid points in the session right now. NQ back testing that 24.643 here. ES single stick back through 6.4. off that 1222 stick. I could tell that this was not going to break when it had that reduction off 2-1 and stalled beneath 6-8 and stalled 6-6. These points in the day had odds for range to occur. So I would say if they had closed above 6-8, you definitely had odds of at least getting back to, at a minimum, like 7-3, 7-2. So some reduction starting to come into play here on ES. And these are very, very crucial periods. So we'll see if they have enough. The good thing is it's a multi-flip. What can happen when you have multi-flips? What are some things that can happen there when you have like a multi-flip that could occur? Intel kind of still stuck between these ranges here. There were some structures that looked pretty bad on this one if they don't start breaking, especially ahead of 1 o'clock. So I would prefer that they try staying above the 32.89 during this period here. Volatility. Well, yeah, volatility could occur, but like something specific in relevance to volatility. What would you have to do to immediately negate this risk that's on here, especially after going back beneath that 6.3, 6.4 mark? So Intel, similar idea here, like they took it back beneath 33.21, right, off that 22 stick. What is Intel doing? Intel's immediately coming back over 33.31. What does ES have to do? Yeah, you'd have to have immediate negation sticks back over 6.4, 6.6, like at a minimum. Otherwise, this is going to stay at some major risk. We're approaching mid-session, guys. This is going to be the most important point of the day here, because this is essentially going to help us determine the kind of range we could have left for the session, our odds, potential direction. Stalling 7.4, 7.5 is something that could still put us at risk here. They're basically leaving a tiny bit of room on the upside and a tiny bit of room on downside. So mid-session retracement is super crucial now. Okay, I'm going to start cleaning this up again. How are you guys feeling for mid-session here? Essentially just before 1 o'clock. Like, they did have some odds for after 1, but typically speaking, during mid-session, it would be a little bit more ideal here ahead of 1 o'clock, but Intel starting to imply some volatility again here too, especially off this 33.22 stall. Well, our window opens up here again at 12:30, so I would say that same sort of idea here. This wasn't that strong, so you guys have to pay attention here. Like, you see how our 12.24 stick, it never retraced 6.4. Are you guys paying attention? This here, this wasn't that strong. So your 12.30 stick definitely has to get at least back over 6.4, ideally 6.6. Like, that would be the best case scenario. Does that make sense, guys? To give you the better odds of getting like the full structure breaks here. Okay. Especially during mid-session, like this is how we're gonna have better odds of getting like some better structure breaks, especially for our mid-session here. Okay. But they really have to put on a show now. 66.66 retraced here at 12:30. Mid-session starting here between 12:30 and 12:44. Intel also getting those mid-session breaks here. Intel had some flips around that 12:32 mark and 12:36. So we can see if Intel comes back to retest 33.41. It was still a higher low, so I mean, the 6.6 retracement, guys, at 12:30 is so important. Your secondary stick has to retrace what? You can't stall this time. There's too much pressure, and you'll see it start occurring. Do you see it? Once you start getting these breaks, you can't stall. Especially during mid-session. This is going to be the most important period for the day today. And we talked about this early morning. And it's between this period here. Okay? Everyone's on the same page? This period here. Okay? Otherwise, they could delay this till 140, which I'm sure no one wants to be stuck in this area here till 140. Just real quick, guys. What time do you think they're going to break this? So highest odd was 1240, 1241. That was my highest odd that I had. But I'm curious to see what you guys think. I think if they can push up 67.74 as early as, let's say, 1236, they could potentially push and expand it this time at 1242. Last time 1240 or 1141 stalled, 1141.42, okay? They had a minute delay. Can we afford a minute delay this time? No, they're still on time. Like 7.4, 7.5 are calculated spots. Those are 44-point ranges. So, and they had, it was just we had higher odds to expand if they broke before mid-session. Does that make sense? So I would say that those odds are definitely reduced now, like of getting to like 16, 20, so on and so forth. But we still have decent odds of getting back to the zone today. If it's past 1 o'clock and we haven't broken like the 7.5, 7.8 area yet, then yeah, I would say that at that point that's pretty delayed. At that point, then they're probably going to start limiting range to 8.8, 9.1, 9.3, 9.6. Do you get what I'm saying? For like max ranges for the session to occur. Intel had some odds of some high of day retest here at 12.36. What time do you guys think they're going to retest highs here if they do? Just give me a point in time. I don't usually ask you guys for time. I usually ask you guys for price, but I think this is a really interesting point here to see. You can't just say right now without logic, though. What's the logic behind right now? So I would say that for them to break right now, like at 12:35, 36, they probably have to take out at least the 7.1, 7.5 to 7.2 area. Okay, like this area here. And probably have to do it by 3.5 or 3.6, sorry. But I still think that the 12.40 to 41 window is a little bit better. Intel getting a retest there of that 33.44 spot. Intel had an odd of retesting the highs here by 12.36. Later at 140 would be absolutely brutal. If they waited till 140 to retest 7.5, that would be insane. Short mid-session? What? Well, it hasn't broken beneath 5.2 yet, and it's stalled 7.5, so I mean... I want to just clear this chart for a second here, just to kind of watch the high of day ranges and see where this is trading, especially since there's odds around the mid-session here. So far it's stalling a bit off 3.6, but I do want to watch the same intervals that ES has here. So far they're... What are you guys playing? DVLT? So I could tell that this wasn't going to break by 3.6, 3.8 because it wasn't even over 7.1, 7.2. Like, you have to have at least some sort of structure break. So this definitely has to sustain off, like, let's say 6.6. Probably retract by that 3.9 in order to even have an odd of retesting by the 4.1 to 4.4 window. $12.40, 42. Yeah, I think for that to happen, Brendan, they probably have to... There we go. Intel getting a break here off that 3.7 mark. Intel a little bit stronger today, so this one had some better odds of potentially breaking right during these mid-session periods here around 12.38, 12.41. Yes, stalling a tiny bit, but we'll see. Like I said, if it retraces back here, it could still have these odds. You would just have to have at least over 7.2, I would say, by like 12.40 for that to be the case. Otherwise, you guys are probably right, and they could start delaying again. reset this. Oh, I didn't realize I even had a mark on here at 1250. The turnarounds at 1230 were super nice on both Intel and ES. Like Intel retracing 33.21 and 31, and ES retracing off 6668 was really, really nice to watch. I'm just marking the midpoints of the session here for Intel. These are not flips. I just want to see what they do during these time periods. Intel's flip was at 1250, but so far these odds are reduced. Can you send the chart for that one, Eddie? I don't think I saw that one. Yeah, so far this doesn't look like that is going to be the case, especially with this breaking back to 6.6 over here and just beneath it. Just be a little bit cautious on ES stalls, especially during this period here. We'll see what they do off 4-1. Well, I'd just be a little bit careful because 4-1 is a pretty important flip. That's similar to this 22. So if they're going to hold here, this has to like flip right back up. Otherwise, this period here is the period that has odds of retesting these lows too, if they can't take out the highs. Does that make sense? Like, look at the range at 1240. Do you guys see this? Because these are periods that have odds for volatility. It's like 6-7 point sticks on these. So this 1241 has to snap right back in order to save this range here. Some good volume came in on Intel off these price ranges too. So where is this? How much time is left in this? Yeah, you're still fine, like within a time range, but like this period here, do you get what I'm saying? Like that has to immediately negate. Like there's no way that this thing cannot not retrace this area. Like 66, 64 minimum to 66, 68. Like you'd have to see some really good strength between 1241 and 1244. This is the midpoint of the session. This gives up. It basically gives it up for the whole session. Does that make sense, guys? Whereas if they retrace back to 66, 66, 66, 68, it still keeps odds in play for the second half of the session. It just gives you odds of reduced range. So not that you don't have odds here. Like this is a really good area to try along with a tight stop, but just have to be mindful that they have to give back the full range. They can't afford to stop during this, especially this period here between like 1241, 1244. And then this can give you that extension through 1248 through 1250. We still have odds before noon, before 1, sorry. Where do they retract this time? 6.5. What do you guys think the 4-4 stick does? They're keeping this really back and forth, but they're doing it very strategically at the same time because they still held 5.8, 5.9 here. Intel getting some retest of that 33.57 here at 4.4. Yes, stalling a bit here. I think NQ stalling just a tiny bit. $36.99 would be insane. Like if this thing actually got to these price ranges. The thing is like I don't know if I should cover all my contracts today, because like this thing could definitely have a multi-day run, right? And those contracts would go insane, but obviously I can't not take any profits, you know what I mean? This is a good spot that we're at down here because it still gives room for both sides. Can you guys vote on that poll, please? Because this is, and I want as many votes as possible for this one, especially since they took it back to 5.8 during this period and also took it back above 6.8 but beneath 7.2, 7.4. So I'm curious to see what you guys think. Nice. I had 31s and 31.50s. I closed half the 31.50s and left the remainder. The 31s I still have my full position in. I was thinking of doing like some lotto plays on it, but then I'm like, I don't want to get too greedy with this play. Because usually when that happens, then you start losing money. But if it goes, yeah, you're right, it could definitely pay. Like especially 33, 34 strike, and this thing goes to like 36, 37. And also if we get like some crazy news again, and like a 1 minute stick like we did yesterday. No, even my 31.50s though. What do you mean? My 31.50s, I bought those at, I think like 38 cents. Those are at $2 right now. And those were 31.50s. Those weren't even the 31s. Let's see what happens in the next. I know, and we haven't even hit 34 yet, so I'm really curious to see what that one does today. Okay, majority voted yes. Before one, they better get moving here at 12:48, 12:50. Like this thing is still hovering beneath 6.6, guys. That's not a good look, especially during this period here. This thing needs to retrace, and it has to retrace fast. Intel getting a high day retest here, right on time at 12:48. Intel had a flip at 12:50. So 4849 would be some really good points here to try. I know, I was thinking that too. Like I started getting a little worried back in here, but then it held the line, because usually Intel, I was saying earlier, doesn't usually hold its gains. Like it's not a good stock that holds gains, typically speaking, anyway. Okay, let me start cleaning this up a bit too. And this is looking pretty delayed. unless they give us some crazy upside stick breaks like they did earlier. Still stalling a little bit here on Intel. I just want to see if it at least tests that 5.7 mark. It doesn't necessarily have to take out the high of day, but at least try testing around that 5.7 area. Yes, I want to see if it hold off 5.8 and try retracting back here a little bit. So far 5.5 stall, I think, right here. Off highs. Oh, on Twitch. I don't know how to set up polls on YouTube. Yeah, well, it's, yeah, exactly, back to like the 6,600 area. I noticed that this one also stalled right here. Just beneath highs. Do we have any catalyst, guys, at 1 o'clock? I think we have a Fed speaker, we have the 7-year no auction, and then we have another. Oh, that's actually interesting that we have a big flip at 12:40, and we have a Fed speaker, or at 1:40, and we have a Fed speaker at 1:40. 1:40 Fed speaker, and it's a flip. We have auctions at 1. And a Fed speaker at 1:40 and 1 o'clock. 1 p.m. Fed speaker too. And then we also have another Fed speaker at 3:30. 3:30, another Fed speaker at 3:30. So I would expect there to be some sort of volatility here after 1 o'clock for sure. Usually you get auction volatility around 104, 108. It's kind of funny that there's a Fed speaker right here though. We'll see what they do in the next like 2 minutes. Thank you so much, Delarizi, for the gift. They're just kind of hovering in the means here, which is really not the best place to be. But we'll have to see. Well, 7.4 to 7.5 is definitely enough to be considered a high of day. Do you get what I'm saying? Like, that's enough to be considered a max range, which is what makes this a little bit more interesting. that they kind of tagged it, but then they're also just still hovering above 5.2. Like, they're really trying to keep this stuck before Fed speakers. I think maybe just to keep the volatility present, potentially. I do want to see what happens with Intel here, though, in the next few minutes. Because they stalled high of day off that calculated time at 12.50 by like a few cents. And I do want to see if ES can make a bit of a turnaround here before 1. All right, have a good one. Good luck this afternoon. Yeah, it is a tough call down here. Yay. Nice work. I didn't really want this giving up 33.21 again, especially ahead of 1 o'clock. Want to see if this would hold structure at 12.54 and try retracting by that 12.57 1 o'clock window here. This definitely needs back above 6466 to protect some of the downside odds that could happen here. I'm going to focus, guys, a little bit. I'm just going to mute myself, okay?
and taught financial regulation and international finance in Michigan. I think one thing that's really interesting about Michael's background is that he is obviously, in one sense, has been like a Washington insider, but also has deep roots in the Midwest or in the heartland of the US. And I was speaking to him earlier, was interested to hear that he spends a fair bit of time going around the country and talking to small businesses, community banks, others, to get a sense of how people are in America. And of course, he also has to deal with the deep issues of stress testing, bank regulation. How do we make the system safe enough? Because I think we can't have a system that is never allows for failure of banks, because that's also dangerous. But we certainly want to have a system that is systemically safe, even if not for individual institutions. Before going to Michigan, Michael served in the Treasury as the Assistant Secretary for Financial Institutions for 2009, 2010 under President Obama. And then before that, he'd been a special assistant in the Treasury Department under Bill Clinton, it says here, but I remember it as being under Bob Rubin and then Larry Summers. He was before that a law clerk to David Souter on the Supreme Court. So he has really an excellent background in both financial regulation, law, his Yale law degree, and in the real world of those who rely on banks and the banking system to get the economy to move. So over to you, Michael.
Thanks very much, Caroline, for that warm introduction. It's great to be with you all here today. And those of you who are here in the room and those of you online, thank you for being here to join for this conversation. Today, I would like to discuss a vital tool for supervising the safety and soundness of the largest banks and preserving the stability of our financial system. I was there at the Treasury Department in 2009 when stress testing was first used in the United States in the heat of battle, an ad hoc measure to reverse a loss of confidence in U.S. banks that was a major force then driving the Great Recession. By examining how the balance sheets of banks would be affected by a worsening of financial and economic conditions, this process was intended to reveal weaknesses that could threaten the solvency of banks and prevent them from playing their central role in the economy. Stress testing ultimately succeeded in helping to restore confidence during the crisis, and in the aftermath of this battle-tested tool became a formal and integral part of the effort to repair the ensuing damage and strengthen the banking system. Stress testing has continued to evolve in the years since then to maintain that strength and help limit the chances of another devastating financial crisis. Stress testing changed as its purpose changed from wartime to peacetime, from mitigating the crisis to preserving the safety, soundness, and stability of the financial system. It has changed as banks and regulators learn more about how stress testing works in practice and is part of an otherwise evolving supervisory and regulatory framework for banks that must necessarily adjust as finance itself evolves. Adjusting regulation in this dynamic environment is challenging, and one of those challenges is dealing with unintended consequences. The Federal Reserve made changes to stress testing in 2020 intended to make it more predictable and to better integrate it with overall capital regulation. But those changes are now at the center of litigation brought by large banks. The Fed responded in April by proposing more changes intended to address these criticisms. But as I explained in voting against those measures, I believe these steps will substantially impair stress testing, concealing rather than revealing crucial weaknesses in the risk management of individual banks and in the stability of the financial system. As the Federal Reserve Board considers these changes, I believe we should focus on how best to address the original purpose and preserve the effectiveness of stress testing. As I will explain, I believe that the best way to further these goals is to separate stress testing from capital requirements in order to maximize the informative value of the tests and their results, and untangle them from the larger and complex task of setting capital requirements. I will lay out that alternative approach toward the end of these remarks.
Just by the way,
But first,
guys,
I believe it
I'm
is
looking
helpful to take
obviously
a
for
step
that
back and recall
1250
how
or
stress
that
testing has
104 hold
evolved
here,
to this point, and then
and
turn to where it might
reattempt
go
of
from here.
6664.
It all began
Ideally by this
during the
110,
global
112
financial
period, just
crisis.
because we've got another
Capital
Fed
markets
speaker
froze, resulting in
at
business
140.
failures and prompting the need for
So far, this is still a
unprecedented
decent
public sector
hold, okay?
intervention.
So,
Credit to households and businesses slowed
like,
to
they
a
could
trickle,
easily still
and
retract
millions of
here,
people
okay?
were losing homes
There we go. That's the
and
kind of stick
jobs.
breaks we want to see, guys,
By
during
the
this time
fall of
frame.
2008,
Can someone
there was a
document the
broad-based
108
lack of
stick?
confidence in the banking
6664,
system,
6663
as
retest
large
here.
banks faced
Is he won
questions about their exposures
6666?
to
Ideally by that
losses
110,
related to
112
real
mark.
estate
This will really
and
help
other
reduce
assets.
risk. We just don't want to
These
be
were
beneath
questions that
6.4
large
here.
banks in many cases could not credibly answer because of the complexity and opacity of their direct and indirect exposure to mortgages at the center of the crisis. Without this information, investors assumed the worst, driving down equity prices of banks, which complicated efforts by banks to bolster their balance sheets.
Intel just keeps
Restoring
reducing
confidence
range
in
here,
the
I've
banking
noticed,
system
off these
required
flips.
credible information
They did it
from a
here at
reliable
04 and they
source.
did it again here. It's not by
Treasury
much,
worked
but
with the Federal Reserve
it's like
to
just enough to
design
keep
the
it from
Supervisory
not
Capital
testing
Assessment
highs.
Program,
It's like
or
10 cents.
SCAP, to test the capital adequacy of what were
Like at
determined to
least
be
this range in
the
here.
19 most systemically important banking and financial institutions. In addition, Congress had provided a backstop in the form of the Troubled Asset Relief Program. The FDIC had backstopped bank funding through guarantees, and the Federal Reserve had stepped up in significant ways to bolster the financial system and the economy. The existence of a government backstop played a big role in the success of the first stress test. With the use of public funding on the line, the rigor and transparency of the stress test was doubly important. There were 5 aspects of the SCAP that are elemental to stress testing and have been present in different tests since then. First, there was the use of a severe but plausible scenario for macroeconomic conditions. The scenario assumed a deeper and more prolonged recession than forecasters expected. Because of the focus on housing-related losses, the scenario's assumption of a further severe decline in house prices was essential to rebuilding confidence. Second, there was the use of economic models to translate a given scenario into quantified losses for each bank. The banking regulators worked together to develop models to map the stress scenario into a range of associated loss rates for different loan categories and iterated with the banks to assess their specific exposures. Third, based on the extent of these projected losses, the test arrived at a firm specific amount of capital that each bank would need in order to withstand this stress and keep lending to customers. A fourth aspect of the SCAP and subsequent stress tests was the public disclosure of the scenario, the basic testing methodology, and most importantly, firm-specific results. And lastly, in addition to the balance sheet data and other numbers related to the stress test, the Federal Reserve produced a qualitative supervisory assessment of the bank's capital planning decisions and processes. One essential element of that first test is that the supervisors reviewed and assessed the data and modeling assumptions used by the banks, which helped to provide credibility for the loss estimates. The result of the SCAP was that 10 of the 19 tested institutions were required to raise capital sufficient to keep them above regulatory minimums if the scenario were to materialize, a total of $75 billion. The 10 were given 6 months to develop capital plans to meet their stress test minimums. The SCAP was remarkably successful. There was skepticism that the test would be sufficiently severe or transparent to be credible. And bank stock prices were volatile due to speculation about what the stress test results would reveal. But bank stocks recovered after the results were announced in May. Most banks that had been struggling to raise capital were able to do so, with 9 of the 10 able to find private sector sources of funding by the 6-month deadline. Credit default swaps for large banks returned to levels seen before the acute stage of the crisis. Bank lending was slower to recover, but stabilizing the banks helped stop the crisis, and the U.S. economy started the long process of recovery that July. I have compared the SCAP to a battlefield campaign, and while the financial crisis certainly felt like combat at the time, my point is to emphasize the unique challenge of making financial regulatory policy in an emergency. The goal was to restore public trust in banks that were under fire, and as the job shifted to preserving that trust, it was apparent that there should be an ongoing role for stress testing in peacetime as well. Starting with the yearly stress test established in 2010 with the Dodd-Frank Act, and continuing with the integration of stress testing into the Federal Reserve's annual Comprehensive Capital Analysis and Review, or CCAR, the peacetime approach focused on institutionalizing bank resilience and risk management practices. The Federal Reserve conducted the first CCAR exercise in 2011. CCAR was an overall assessment of the capital planning process of banks, which included quantitative and qualitative components. Either of those components could form the basis for an objection by the Fed to firm plans to distribute capital to shareholders, distribution which would reduce the capital available that the firm could use to buffer its losses. The quantitative evaluation of a firm's capital adequacy was driven by the results of the Dodd-Frank Act stress test, or DFAST. It departed from the SCAP in at least two important ways. First, rather than making the severe scenario just a more negative version of the current consensus forecast, the Fed built a process to develop thematic, forward-looking scenarios using macroeconomic models calibrated to historical data. Some parts of the scenario design framework are purposefully countercyclical under normal conditions. For instance, the minimum peak unemployment rate is set at 10%. The countercyclicality of stress test scenarios is an attempt to lean against the pro-cyclical effects that can make borrowers appear overly resilient in good times, something which could cause the model to significantly understate the magnitude of borrower defaults when the economy turns. The second way that the Dodd-Frank stress test departed from CCAR is that most losses under that test are projected by applying models developed and operated by the Federal Reserve based on data provided by the banks. Using Fed-developed and validated models provides for independent risk assessment. The granular data provided by banks has been valuable in ensuring that the stress tests are truly risk-sensitive and in understanding broader trends and interconnections in the financial system. In addition to this quantitative test, CCAR assesses the ability of banks to determine their capital needs in the future. Supplementing the DFAST model administered by the Fed, each bank projects its income over the stress scenario using internal models, providing supervisors with a view of governance and risk management of the bank's capital planning process. If a bank did not pass either the qualitative or quantitative evaluation, the Board of Governors was able to object to the capital plan and restrict the firm's shareholder distributions. Over time, several criticisms of CCAR's approach emerged. The first, that CCAR was wholly separate from the process used to set a bank's basic risk-based capital requirements. Large banks also criticized CCAR for a lack of transparency and predictability that resulted in them pre-committing to lower capital distributions and higher levels of capital. In 2020, the Federal Reserve Board addressed these bank criticisms by creating the Stress Capital Buffer, or SCB. I know there's a lot of acronyms. To address the criticism that CCAR was additive and wasn't integrated into capital planning, the SCB combined the basic capital requirement for banks with one equal to a bank's projected capital ratio decline during the stress period, plus a year's worth of planned dividends, linking components of the capital framework. To address the claim that CCAR lacked transparency and predictability, the SCB requirement set for each participating bank at a level that reflected its losses in the stress test and provided banks with flexibility to change their dividends in real time. Another bank criticism was that CCAR's use of its qualitative assessment was subjective. The SCB dropped the qualitative objection and moved that assessment of capital planning practices into the traditional supervisory process. By more directly integrating stress testing into capital regulation, the SCB increasingly moved stress testing away from supervision and toward the regulatory arena, a consequential decision. While this change was intended to promote consistency,
They're starting to cut really close guys on time,
in
like
retrospect,
especially
it may have
above, like
reduced
hovering
some of the
beneath
value of the
6.4 but above
exercise, in
5.5.
that it reduced
They
the
have to
range of
break one
facts and
enter pretty
circumstances the
quick,
board would
especially
take
ahead of
into
like this
account
140
when
flip.
evaluating an individual firm's capital adequacy.
Usually around 124,
As a
130 has
result,
some
the
odds
board's
anyway, so we can
flexibility
kind of
to
watch.
adjust capital adequacy
Um,
determinations
I was
based
looking
on
to
the
see
unique
what happens
features of
on
different
Intel
firms,
here at 118,
including different
just
business
because there were
models
some
and
bear
risk
structures
profiles,
forming.
was constrained. When I became vice chair for supervision in 2022, we continued the process of evolving the stress test. In particular, the Fed conducted multiple scenarios not directly connected to setting banks' capital requirements. Using additional scenarios has helped us to understand how a broader range of risks might affect the banking system. For example, we've explored a stagflation scenario and looked at the failures of large non-bank counterparties. Using multiple scenarios has helped keep our risk assessments dynamic. Before turning to the legal challenges to the current stress test framework, I would be remiss not to emphasize the value of the framework we have. The stress test has been a critical element that led to strengthening both the quantity of capital in the banking system and the risk management capabilities of large banks. Since the global financial crisis, large banks have more than doubled their risk-based common equity capital ratios, from roughly 5% to 12% or more. At the same time, they have made meaningful improvements in their ability to measure, monitor, and manage their own risks. The stress test has directly contributed to both. Despite this success, some have argued for what they term full transparency of the test. But the criticism can be misleading because two important points are often omitted. First, the Federal Reserve already provides substantial information about the design of the test and has expanded these disclosures over time. Banks are far from uninformed. They receive substantial information about the models in annual model methodology disclosures, and any material model changes are phased in over 2 years with full explanation. Second, what critics call transparency is not disclosure of basic information about the rigor and methodology of the test, essential for its credibility. Instead, it is the equivalent of handing out the questions to the test in advance. That would fundamentally undermine the rigor of the test, which is intended to assess resilience under conditions not fully known in advance, just as in a financial crisis. In short, the framework strikes a deliberate balance, providing banks with enough information about scenarios and models to ensure fairness and accountability, while preserving the rigor that makes the stress test an effective safeguard. In December 2024, bank trade associations brought suit against the Board of Governors, challenging the role of stress testing in setting SCB requirements for large firms. The trade associations have challenged what they contend is the opacity of certain elements of the stress testing process, and have argued that the models and scenarios should be released in proposed form to promote transparency and facilitate public comment. In anticipation of and in response to this litigation, the board announced that it would disclose and seek public comment on all the models that determine the hypothetical losses and revenue of banks under stress, as well as the annual stress scenarios. The board also proposed to change its rules to average stress testing results over 2 years to reduce the year-over-year volatility in the capital requirements that result from annual stress testing. These proposed changes represent a policy choice to respond to the litigation by enhancing transparency and promoting public participation, and they are not intended to materially affect overall capital requirements. But, in my judgment, they are a mistake that will make stress testing less rigorous and nimble. Subjecting the stress testing models to the notice and comment process could lead them to ossify, and their dynamism and effectiveness may fade. Stress testing models are inherently complex and require adjustments to maintain accuracy and relevance to appropriately account for quickly developing risks. Changes in the model would require new notice and solicitation of comment, and the time lag and burden in making changes would be significantly extended. We saw this type of ossification play out before the global financial crisis, when supervisory stress testing of Fannie Mae and Freddie Mac became formulaic and failed to capture escalating risks with dire consequences. An additional problem is that the comment process may have an uneven effect, since banks have an incentive to object to aspects of the models that result in higher capital requirements, and not to highlight the areas in which the models underestimate downside risk. Responding to these comments could create a one-way ratchet that successively weakens capital requirements. Knowing the details of the stress test in advance will also increase the likelihood that banks are able to game the results to lower their capital requirements. We've seen examples of how firms have been able to game stress tests in the past. For instance, some firms started to use so-called macro hedges. Many of these macro hedges were hedges against a deep recession, similar to a stress test scenario, and these short-term hedges were cheap because investors assumed these scenarios as extremely unlikely. They were far out of the money in option terms. The hedges reduced projected capital losses in the stress test by billions of dollars for some banks. But they weren't really credible protection from the effects of a recession, because maintaining these hedges would become prohibitively expensive as the economy moved into an actual downturn. This is just one example of attempts to game the stress tests that were eventually addressed through the supervisory process. But this example underscores how full disclosure of the Fed's stress test models and scenarios would enable banks to optimize stress test results by, among other things, adjusting their balance sheets based on their knowledge of where the models underprice risk in order to reduce their capital requirements without materially reducing their actual risks. Banks are likely to change their behavior in other ways that increase risk. Banks may invest less in their own risk management framework if the test becomes too predictable. Full disclosure of the board's models may encourage concentration across the banking system in assets that receive comparably lighter treatment in the test, which could create risks to financial stability. And banks are likely to reduce their management buffers, making it more likely that they would breach their required buffers and minimums in the event of stress. The upshot is that a so-called full transparency stress test can increase systemic risk because risk is underestimated and capital is too low. The stress tests could lose their credibility. A loss in credibility is bad for the banks, bad for the banking system, bad for financial stability, and ultimately bad for American families and businesses. As an alternative path to these proposed changes, I would favor prioritizing the rigor of the stress testing framework by separating stress testing from binding regulatory capital requirements, which would instead be increased commensurately. The Dodd-Frank Act requires that the board conduct stress tests on large banks to evaluate whether such companies have the capital on a total consolidated basis necessary to absorb losses as a result of adverse economic conditions. While these results can and should still play a role in informing supervisory and managerial assessments of the appropriate capital level for particular banking organizations, decoupling the stress test results from the preliminary SCB would enable the board to preserve essential aspects of stress testing, including the generation of credible and detailed information on the risk exposures of banks and how their capital levels would be affected by a stress event. Such information would be valuable in the supervision of banks in the normal times, and especially important for banks and the financial system if they are again threatened by crisis. If the stress tests are no longer used to inform the calculation of a firm's preliminary SCB requirement, the legal justification for publishing the models and scenarios for comment would be eliminated. And I've already discussed the policy grounds for not publishing them. So the board could abandon the notice and comment proposal. The board could instead approach these statutorily required tests.
I was just seeing, guys, because like I said earlier, we had odds of going back to the channel. They kind of breached this a little bit more than I wanted. I would have preferred they held 4849, but I have some odds at 128, 130 to see if they retract back over 57, 58. Okay, so for Intel, I wanted to see if it would retract back over this 33.22 and then right at this 33.31 around this point in time.
Through a range of channels. And testing a large bank's unique profile under a range of risks is more likely to yield high-value information about a bank's likely resilience to potential stress events. The net result of these changes would be to increase the nimbleness, dynamism, and effectiveness of our current stress testing framework. The board's continued publication of firm-specific results would promote transparency and market discipline.
NQ off the bottom of the
So
zone,
this
same
change
thing,
does not
needs
reduce
back over that
overall capital in the
24,609,
system.
617.
SCBs could instead be set entirely by regulation. For most non-GSIBs subject to the SCB requirement, the current 2.5% buffer floor likely remains an appropriate level. For GSIBs with a lot of trading, past stress tests have routinely indicated that SCBs should likely be set higher than the 2.5% floor, and any regulatory capital measure designed to replace the current SCB framework would need to account for this gap. While further analytical work is required, the shortfall generated by decoupling the stress test from the SCB may be largely addressed by a regulatory capital requirement linked to the risks in the trading book, with perhaps some other adjustments as required to maintain appropriate capital levels. If over time stress testing results indicate that this replacement regulatory capital measure routinely exceeds or falls short of the capital levels required to provide adequate resilience to stress conditions, the board could revise the regulatory measure through a notice and comment process, informed by data gathered in the stress testing process. This proposed approach of decoupling the stress test from regulatory capital and increasing regulatory capital to make up the shortfall in the SCB appears to me to be the best way to retain the value of stress testing as a supervisory exercise while maintaining appropriate levels of capital in the system. However, replacing the current framework of individualized SCBs informed by firm-specific stress test results with broadly applicable formulaic regulatory capital requirements would result in a diminution of the risk sensitivity reflected in the SCB requirements. That is, capital levels for firms that are subject to the stress test would be relatively less tailored than they currently are, and less reflective of the unique business models, exposures, and risk profiles of a particular firm. To address this loss in risk sensitivity, I would propose that, in exceptional circumstances, the board could use its capital directive authority to impose individualized capital requirements on specific firms to account for a firm's particular circumstances, including its capital structure, riskiness, complexity, financial activities, and other appropriate risk-related factors. This would be similar to the United Kingdom's Pillar 2B requirements and those of other jurisdictions. While these requirements could be informed by the stress test results in part, they would also take into account qualitative factors and supervisory judgment. Because these individualized requirements would consider the specific risks of a firm, they would be adjusted to reflect a firm's specific risk profile. While I don't believe it would be advisable for this type of exercise to become the default manner for setting capital requirements, in exceptional cases, it would preserve some of the tailoring benefits of the current SCB regime in a manner that comports with the changes I have discussed. Furthermore, it would preserve the ability for banks to address stress results that demonstrate significant deficiencies in capital adequacy under a stress scenario, when the firms are otherwise in compliance with regulatory capital requirements. With these changes, stress testing could maintain its flexibility and adaptability, and therefore could retain its value as an effective tool for identifying idiosyncratic risk in a major bank and ensuring that capital is sufficient to address that risk. Among the benefits would be the space this approach would allow for continued innovation in stress testing. Such innovation is vital as finance evolves, and banks continue to seek ways to reduce supervisory and regulatory requirements. This approach could allow for scenario design and modeling advancements unencumbered by the limitations I've spoken of imposed by the notice and comment process. In conclusion, I believe it is critically important to maintain the dynamism and rigor of stress testing so that supervisors, banks, and the public understand the underlying vulnerabilities in the banking system and at the largest banks, and understand that these firms are holding sufficient capital to address these vulnerabilities. I have deep concerns that the set of changes the board is now considering risks reliance on a stress test that can no longer effectively assess the resilience of the largest banks and lacks credibility, thus putting our financial system and the economy at risk. Thank you very much.
Well, that was not uplifting, at least at the end. And so I want to go straight into asking you, what do you think is the chance of your recommendation gathering support, and maybe even gathering support sufficient to, to become, for the board to turn back from where they were and for other voices to join in and argue for more flexibility? I have also to confess that having first dealt with or learned about supervision and regulation when I was at the Bank of England, where supervisory rather than regulatory approach was very much in the way of doing things, it does seem attractive to me to think of holding the flexibility and relying more on supervisory challenges, on supervisory oversight. But of course, that does raise the question of are the supervisors up to the task? Mm-hmm. So, first question is your approach have a chance?
I think there's time for the board to think about it. We haven't had a formal proposal yet before the board. There's time for the board to assess that. There'll be time if the board moves forward with this first stage of the notice and comment process for us to receive comments from the public and to take those comments into account. And my experience has been in serving on the board and as an observer of it for many decades now, that the board is open to different ways of thinking about things and is not locked into any predetermined strategy. So the reason for giving these remarks and for encouraging the public to engage in this process is that I hope that the board will be open to an alternative way of getting out of the box that we're currently in.
I was in a discussion with another supervisor just recently who was commenting that as far as money is concerned, there's nothing new under the sun. But as far as IT, with the developments in information technology, IT people come up with ideas and they don't understand about money. Money people don't understand about IT. Do you see that as a problem in this issue of stress testing, that there are all sorts of clever ways for the IT people to figure out new models and so on? And we know that fundamentally there are cycles and bad loans are made in good times. And during the good times, there's tremendous pressure to release. You've written about this or spoken about this, to relieve pressure on capital, and then in the bad times, the government might
it's not there.
So, how do you see that interplay of the development of new technologies and the work that is, in one sense, the same as it's been for decades, of trying to make banks take account of risk?
Well, there are kind of three elements in the questions that you've raised. One is this cycle of history that we see and that you referred to, I gave remarks on not that long ago. We do see these cycles repeat over time in periods where the economy seems to be doing well and memories of the last financial crisis have faded. There's this tendency to reduce regulation or not to keep up with the changes by making sure regulation keeps a pace. And that failure to keep pace or to even reverse regulation that is there in good times ends up feeding the next financial crisis. And as you said, oftentimes it's the case, first of all, that financial crisis causes enormous harm to families and to businesses. We certainly saw that in the global financial crisis in spades. And then the second thing that often happens is the government then has to step in and support the financial sector so that the financial sector can once again support the economy. And the whole point of getting regulation right in advance is that you make it less likely that firms will get themselves into such trouble that they harm the real economy and government is required to step in. And I do worry that we're in the beginning of one of these deregulatory processes, deregulatory cycles now. You can see it in lots of different areas, stress testing, supervision, capital, to name a few. The second theme you raised is this question about regulation versus supervision. And
I just want to see what they do, guys, here off the 66, 44, 45 area, especially ahead of 140. This is their only chance to try even remotely saving this, but I think it could end up being a bit of a choppy afternoon since we entered the channel. Entering the channel really reduced odds for today's session. This is where it could kind of start going sideways between the channel, the means, core areas. I would probably avoid trading it personally.
Your third theme, which is this question of technology and can the regulator keep
That's
up?
just me, though.
And that's one of the reasons that
I want to see if they get it back in the means before 140, like so back over 66, 52, 53. We have another Fed speaker here at 140 as well. This is also a big structural flip this afternoon.
And people will invent new ways to take on risks.
Some individual names, though, held up pretty nicely, like
And it will
in comparison to the index.
the stress test to keep up. I really worry that
They did definitely take away our odds, so when they stalled 6.4, 6.6 back here, which was unfortunate.
Make it harder for the stress
So let's see how much range they can retract here in the next few minutes.
any fault of anybody at the Fed. I'm sure
You guys know I don't like trading sideways price action, so if I feel like this could go sideways, I'm just going to sit out.
to keep the stress test dynamic and relevant and accurate. But they're going to be
Intel still hasn't taken out the high.
the bank lobby and the notice and comment rulemaking process.
I think ES is obviously playing a factor with that too.
And that will make it hard for them to stay dynamic. And that's the worry that I have, that we'll end up with a stress testing process that sort of blesses the banking system as being safe when it's not.
Right. So it's interesting that there's an arc of the US inventing stress testing essentially after the global financial crisis, and in a sense banks submitting to it, maybe not always happily.
And watch our 145, 148, 150 period. This is usually a pretty important time of day anyway.
By the system and embraced by the safety net. Then it becomes more and more annoying to the banks to have this safety net, which they feel is unnecessary and so on. When as I was listening to you, I was thinking it's like a kind of cat and mouse game between the banking firms that want to take on risk in order to make profits, and the regulators who are looking at it from a systemic point of view and want to limit that risk. And is that just the nature of the beast, that it will always be this cat and mouse game with periodic crises necessary to, I don't know, knock some sense into the risk takers, but at a big economic cost? So how do you see that?
No, I do worry about that. I mean, there is this cat and mouse aspect of the game. I mean, banks respond to a set of incentives in the world.
This is also close to being like a 17-point ratio off open, around 4.3, FYI. Okay, off opening range, like this is why they could still have room for lower, like a 33, 34-point ratio, like I said this morning in Discord, is closer to like 66.27, 66.22. We have those odds still between this area here, which is partially why I really wanted them to avoid heading back to the channel, just because there is still some risk below in this area in here. That really starts to reduce our odds. I think that they have a decent chance of holding, but they really would have to try holding the line here. I think I'm going to end the stream, guys, and just focus on my own stuff into the close. If I decide to stream the last hour, I'll let you guys know.